Good morning, everyone. Welcome to our Thursday morning trading session. I'm losing track of my days here. Hold on one second. I get the screen share going. Okay, we got the screen share up and running. For those of you new in our trading room this morning, I see a few new names here. Welcome. Please feel free to ask questions if there's something that is confusing you, or if there's something that you just want to see, feel free to ask. As you can see, the charts I'm running here are the NASDAQ market. The way I have my charts laid out here, in the top left I have the Hawk Micro Scalper, top right Falcon Swing Trader, bottom left Eagle Trend Trader, and the bottom right the new and improved Raptor. I'm also following the 6E and crude oil, but I would be happy to pull up any market which is of interest to you. Getting a little bit of a flurry out of the open here. Yesterday, the afternoon session, just an amazing session. I did not expect such a strong decline, I have to say. I thought maybe the sellers would be able to throw the market into a sideways type trading range, but no, they got their act together and they filled that opening range gap. So a huge decline in the NASDAQ yesterday, only to recover through the Asian session and the European session. Relatively quiet, but still a big push up, and now we kind of find ourselves near yesterday's highs. Not quite there yet. Yesterday's highs around the 54, 30, 35 area. We're still about 10 points shy of that. But that leaves us with another rather substantial opening gap here on the NASDAQ. So we'll see whether they try to get in there or not. Right now, just a couple minutes into the session, so the fur is still flying as the buyers and sellers try to gain dominance. And we'll just give them a few moments here to settle in. You can see on our support and resistance suite, we're up at here in the secondary resistance lines. We're above the primary resistance, making this a little bit more of a bullish market today, at least according to the support and resistance suite. And right now we are up against a secondary resistance line here at 54.26. We don't really have a signal per se. We did have a little bit of a 4-arrow consolidation here on the Hawk, just coming into the market open. And they just poked through there momentarily. So we might see a little bit of a pullback here. as the sellers get a little bit more aggressive off that resistance line. A lot of volume going through these bars. You can see they're a little bit wider. Great question here from Aspen this morning. Aspen asking, Eric, is it a good idea to trade in the first few minutes of opening, or how long do you wait for a good opportunity? You know, trading the open is always tough. There's some people who will watch the first 5 minutes or 15 minutes and let that kind of become their range, and then they'll bracket that opening 5 or 15-minute bar and trade a breakout above or short a breakout below. It works as good as anything trading related, meaning it will work sometimes and it doesn't work other times. Personally, I'm of the mindset I'll sit here as long as I need to find a high probability trade. Other way of looking at a high probability trade is to consider it a low risk trade, right? A trade that I can take with a great deal of confidence. In my journal, I can tell you that typically I'll get a signal about 6 or 7 minutes into the session. We're a little bit late here this morning. We're almost 10 minutes into the day, and we haven't gotten a signal yet. And then I will typically get another signal about 15 to 20 minutes into the session. And then after that, I'll usually get a signal about an hour after the open, and about 15 minutes after that. This is why it's very useful to keep a trading journal, because without a journal, you would never discover that type of pattern. Now, I don't, consciously look for a signal at those times. It just seems to happen that way. And when you think about it, it makes a little bit of sense. The buyers and sellers, the news is at the floor, everybody is reacting. Nowadays, so much is computer-generated trading programs, so the programs have certain parameters to meet. All right, I wonder if we're forming a top here. See, we've got that opening gap below us again. And very often the market does try to get into that gap early. Not always, but very often. A nice little retest here, even if it's just a really short-term retest, a bar or two and a reversal would give me all the reason I need to short. Oh, there we go. Getting a little bit of a push. Okay, we're going to get a little bit of a hard edge bounce here, it looks like. We've already got our red bar buy signal, which you could short. The red bar buy signal is a trade that you can take either way. You can look to buy it or sell it. It does tend to develop near the end of a trend. And of course, you don't need to trade this one. You can always use it as an early warning that perhaps a trend is beginning to end. The only nice thing about a counter trend signal is that it's pretty obvious where you need to cover the trade. You need to be able to cover the trade above the high, especially in this case as we are anticipating a test of the extreme before the ultimate failure. So what I'm doing here, a little bit more aggressive, folks, if you're looking for a trade to mirror that, bear in mind, we may see a little bit of a rally here before the market tries to head lower. But it does look as though we may try to get into that gap. Natalia, crushing it this morning. Well done. Natalia says, good morning, Eric. Happy morning. Got 2 trades, 20 ticks, 7 contracts each, $1,330. Nicely done, Natalia. Way to go. That's just fantastic news. Like I've said before, I really like to hear your success stories because it's, well, not only is it good to hear, but it's nice to know that you guys are trading on your own as well. So here we are, almost quarter to the hour. So we're a little bit later than usual, but here we're getting that signal, and I eliminated my break-even trigger and profit target. I'm hoping for a little bit of a run out here, but it's dicey because I haven't seen that test of the extreme, and it is likely that I'm going to get one. So we'll see what happens here over the next couple of minutes. Here comes the buying. I'm not in heavy in this trade. It's only a single contract. Okay, just making a couple notes here in my journal. And you can see everything in sync now except for the bar color. So we are trying to work a first micro-macro cross lower as well. Nice thing about the NASDAQ is very often you don't need to rush into a trade because gapping your entry is not usually a concern, as it is with some other faster moving markets. Aspen making a point here saying, Eric, when you do the videos, please tell us what all these fancy dots, triangles, and hash marks that appear, the reason why those are there on the Raptor. I will, but here in the meantime, yeah, people always ask, well, why is it still printing signals here? The Raptor, excuse me, the Raptor, as well as the other DTS tools, have a price component to it. These are not just tools that, you know, say, okay, when the stochastics do this and the moving averages do that and the MACD does this, then we get a buy signal. No, that's not it. There's actually a price component built in as well. And that's what causes some of these intermediate signals to print. Now, these signals are still valid signals. As you can see, there's some decent follow through, certainly enough for a scalper's profit on many of these signals. But as many of you already know, I'm not of the opinion that you need to trade more in order to make more money. Like Natalia proved this morning, she took 2 trades, but she optimized her position. She was able to get in there with 7 contracts, and she's walking away with a 4-figure day, a very healthy 4-figure day. Trading these types of signals is much easier to do in hindsight than it is in real time. In real time, it's better for you to concentrate on the higher probability signals. These are the ones that the Raptor will print. These are the signals when you get like a number 2 counter trend signal. Then you can look and see, do I have a trend before? Yes, I do. Do I have a retest of the extreme and a failure? Yes, I do. Okay, that's why I'm getting a counter trend signal, and you can go ahead and give it a go. Does that mean these other signals that are printing here are less valid? No, they're not. They have met all the parameters for the Raptor, but they may not be of the same quality as the higher probability signals, if that makes sense. If you have the Profit Finder, sometimes a pretty easy exercise is just to run your Profit Finder on all the signals and see what the results are. That's an easy way to prove it to yourself that, you know, chasing more signals does not make you more money. All right, things starting to turn over here a little. So we've also produced a first micro-macro cross. This is why I say with the red bar buy signal, if you're looking to short the failure, you don't always need to sell the red bar buy, because the first micro-macro cross tends to print shortly thereafter and usually in the same region. In this case, you can see I could have actually got a better price shorting the first micro-macro cross. Occasionally, it will develop a little higher or lower. Here again, a green bar sell, so you could look for the first micro-macro cross, which formed a little bit later, about 20 bars later, and again in the more or less the same price region, maybe a tick or two higher. All right, well, getting a little bit of a bullish rally here now. Not liking that. Great, Oliver. Oliver says, I'm new to the room. That explanation was helpful. Ask away. Like I said, it's in spite of what my wife thinks, I am not a mind reader. So if there's something that's bugging you, please ask. I will do my best to answer. So now the big debate with my trade is, do I leave my stop back? Do I try to hold out, ride out this swing? Or do I bring my stops in quick and take the early loss, a small loss, and go at it again? I think if the sellers recommit here and start pushing the market down again, that'd probably be a good reason as any to bring my stops in, especially if we get back close to this 54, 15, 16 zone. By the way, it didn't print as a counter trend signal, but you could have interpreted this signal here as a number 2 counter trend signal. I would not suggest taking it on the hash mark when the low is only like 3 ticks away. I would have given up the extra 3 ticks and set up the trade to look something like that. In which case, we would still be waiting to get short. And so you can even just throw the order in there, just park it. Same problem as my hawk trade, however. The big $64 question is, are we going to see more of a test of the extreme? Or is that all that the buyers are going to give us? Obviously, a break down here below 54.16, 54.15 would trap a lot of buyers out of their long positions, and that should help spur the market lower. The Falcon giving a similar signal. We've got a trend change signal. I've got enough going on here between the Raptor and the Hawk, so I'm not going to load up. Oh, yes, we do. Tony says we've got a 4-arrow consolidation. Yeah, that's true. So a little bit sloppy, but you're right. That is a 4-arrow consolidation to be sure. Okay, so we're getting a little bit of a breakdown. Took a little slippage here on the Raptor as well. I don't know if you noticed that. It looks like they slipped us a couple of ticks. And I've also deleted my profit objective here on the Raptor, hoping that we're going to fill that big gap this morning. So a lot of activity around this 54.15 area. Come on, get going. Almost to the break-even trigger, which coincides with our primary resistance line. Doggone it. Get going. I'm trying so hard to be patient with this trade. To fill the gap, we should see the market retrace here to the median line, which is around 54.02. Technically, I think the gap is 5400, but 54.02 would be close enough. Excuse me. It's only been 3 weeks. You can tell my cough still lingering, and it's driving me bonkers. All right, so we've produced a hard edge bounce signal now. This is a valid signal. However, since we are anticipating that the market might be reversing, we don't know just yet, it would be advisable to allow for a second push entry opportunity. Now, all the second push means is that we allow the signal to engage, and then we wait for the market to retreat from the signal. As you can see, it will tend to do. It's because these hash marks, these areas where these signals print, they're they're there for a reason. Like, the programming recognizes that there's a lot of price sensitivity at this particular level. That's why you'll sometimes get that little hiccup before the market moves. And that gives you a better opportunity for entry, because what you can do is, now we know that's the limit of the buying, so you can place your entry on the other side of this little high. All right, so we're right back here in the thick of it, around the 54.15, 54.16 area. Oh dear, we got a real struggle going on. So this could be a rather prolonged retest of the high. I guess in hindsight, I should have just taken my profit when I had it. Always, well, not always. It turns around to bite me a lot when I try to run a trade out. All right, so here the seller's digging in a little. We got to see some more aggressive selling. So you can draw a little trend line like so. And it looks like if we can break this 54, 18, 54, 17, 3/4, 17 half area, we might pick up a few sellers. All right, come on down. No, so far the buyer's holding tough. Christian's asking Eric for the E-mini. Were the Raptor settings 2 ticks or 4 ticks for the mean wrinkle bars? 4 ticks, Christian. Oh dear, the buyer's making a hard press here. Uh-oh. Things not looking so good right now. Doggone it. They're going to tag me here in a moment. Yep. That's unfortunate. Way to go, Aspen. Aspen long on that number 3 signals. Well done. Robert's asking, I had to set my NASDAQ. What are the settings? Okay, well, we're running an 8-tick brick. I'm assuming you're asking about the Raptor. We're running an 8-tick brick. And the rest of the Raptor settings are the defaults. So if we go into the indicator window and you find your Raptor tool, you really don't need to change anything. So we've got a 12 and an 8-tick cloud and a 6-tick brick for the hawk. You can change your colors if you like. If you do make any changes, I recommend that you save them as a template. That way, next time you reload a Raptor chart, all you have to do is go and load your template, and it will have all the settings that you want. Oh, here on the Eagle, well, we were watching that Raptor trade unfold. We also had our hard edge bounce and the red bar buy signal. And this would have been our first Eagle signal of the day. And I think that has found its profit objective. Yes, it has. Excuse me. Okay, so we're floundering. We're back at the highs, and it looks like, I don't know if the sellers are going to try to knock them down here again. Okay, we don't have a sell signal just yet, but if you are long here, you might want to consider bringing your stops in at least a little, especially if this bar gives you a little bit of a reaction. The reason being, we would have essentially a double top here. And if the market reverses from here, say posts another lower bar, then it is likely there may be some repercussions there.
Order canceled.
Okay, so we're seeing this would now be considered a test of the extreme here. So if we get a sell signal, that could be a saleable signal. Hey, way to go, Aspen. Aspen out, he says, with a nice profit, $120. Well done. All right, we'll set this back on the shelf for now. Working a possible macro pullback signal here. We've got these same obstacles on the way down that we had on the way up, namely the 54.18 area, probably going to be another sticky spot. Watching the Geiger counter flip back and forth here. Oh, there we go. Oh, dear. The buyers reversed what selling pressure we had. There we go. Get around there. It's a very important bar that we have forming here. If this bar finishes lower, I think we're going to see prices drift a little bit. However, if it finishes higher, it may well challenge the highs. Okay, the seller's getting a little bit stronger. Not home free yet, though. Dan saying a 4-arrow consolidation here on the Hawk. Yeah, it's getting there. As far as the 4-arrow consolidation goes, we've technically only printed 2 out of the 4 arrows, but I see where you're getting at. And it's certainly valid to do it this way. We have gotten 4 signals. What's tough about trading right now is it's hard to tell whether the market is in a trading range. So if it's in a trading range, we're going to see buying down here. We're going to see selling up here. Or is it in transition? Is this, in fact, a double top, retesting this extreme, and the market's going to head lower? Or is this just a pullback during a rally phase? So not all the data is in, but yeah, Dan, you are right. This is a 4-arrow consolidation. What you might want to do is you may want to throw a little trend line across here, kind of reserve your entry on the other side of the trend line. I think that might be a little bit more predictable. And because the market might be transitioning, you may consider going all in, all out, and maybe not all that heavy either. You know, throw a single or two contracts on it, and if you can scalp in and out, then fantastic. Okay, Robert asks, how do you determine on a deep pullback and the seller's getting stronger? Well, here we'll go to the Raptor because I'm waiting for a sell signal here on the Raptor. Whenever there is a deep pullback, you need to ask yourself, are the sellers taking control, or is this merely a pullback within a longer uptrend? The giveaway is when the market tests the extreme and fails. So in this case, if we see the market come up here a little bit and then reverse on itself, then that will pretty much tell us that the buyers are done. Generally speaking, whoever controls the last swing controls the market. So back here, the buyers swung the market, so they controlled the market from here to here. Right now, the sellers are in control because they took the market back here at the highs. See, if we go back here where the market is making all these pullbacks, the market is not ready to reverse until we see the test of the extreme. In this case, the extreme is the low and the failure. And that occurred down here where all of a sudden, well, all of a sudden, where the sellers were no longer able to continue the downtrend. You see, on every one of these pullbacks, the sellers were able to continue the downtrend, weren't they? Except right here, they came up short. That's your first clue that the sellers are getting stronger. Or pardon me, in this case, the buyers are getting stronger. The sellers are getting weaker. We're looking for the opposite to happen here. Another clue, oh, here, let me go back here. Another clue, and sometimes you have to wait for this one a little bit, is when you violate a significant swing point. Now, I know you're saying, well, what determines significant? If it looks significant, it is significant. So I would probably consider this swing point to be fairly significant. Once the market breaches that swing point and recovers, there is a tendency for price to give you two pushes in the direction of the breakout. This would have been push number one, and then this becomes push number two. It's almost as though, you know, when all this starts to unfold, the buyers owe it to themselves to at least give one more rally, really good rally try before the market fails. And this happens all over the place. You know, if you consider this a significant swing point and it's breached here and it's confirmed here, you could say, okay, well, this was my first push, this is my second push, I'm going to try to short it. Now, like I said, you want to look for significant breaches, and these types of things tend to happen at reversal points. It's not, oh, I breached the resistance higher here. The market owes me 2 pushes up. No, that's not how it works. It works on reversals. When you are in an obvious uptrend, you're supposed to break the resistance, right? It's the support that's supposed to hold. But you don't want to start micromanaging. You don't want to look at this and say, oh, well, there's a swing point right there. Oh, the market broke that swing point. It owes me another move lower. Well, this is hardly a significant swing point. These are significant swing points. This is a significant swing point. Even this one down here is a little bit more obvious. Yeah, let's use obvious. If it looks like an obvious swing point, then that's the one you want to go with. So while I was talking, I guess this became our number 2 signal here to short. It didn't print because of the parameters for the programming. This test of the extreme is too far away from this one, but the principle remains the same. And what annoys the heck out of me is that this happened to me the other day too, where I had my stop and the market tagged me just by a couple of ticks and then went in my direction. Most annoying. Okay, so the Geiger counter was, there we go. The Geiger counter is swinging a little bit more to the short side and sticking. Looks like we may be near a trend line here as well. Yeah, pretty close to a trend line. So again, 54.18 we know is a relatively sensitive area for the market. Yeah, Robert remembers it from yesterday as well. He says, you mentioned that number yesterday. Yeah, the numbers do have a tendency to repeat themselves. So this is the trade I was looking to do anyways. Looks like we would have hit our first profit objective. Rest of the trade would be at break even now. We are getting a little bit of a first micro macro cross signal here on the hawk, right at the hard edge of the trading band. This is a tough one to cover. You know, ideally the stop should go up there. A more palatable stop would be somewhere around the crest in the macro line, I think. This is a tough short, folks. This is really a let's throw it against the wall and see if it sticks kind of trade. Entering below the low is safer. You could short below here, offer up a couple of ticks. That's a safer trade. Nicely done. My goodness, you guys are just knocking it out of the park here today. Gary says, I'm up over $1,000 and still short crude oil. After this trade, I'm done. We'll be out for the next week on a mission trip to Peru in the Andes. Wow. That's quite the trip, Gary. I'm assuming you're in the U.S.? That's going to be quite a haul to get down to the Andes. Well, take care. Never been to Peru, but certainly an interesting looking place. Wow, fantastic. Gary says they're going to be doing water purification and building rocket stoves. All right, looks like we can scrub this here and we'll clean that up there. Steven says he's been to Peru twice and survived. All right, so we're still just kind of watching and waiting. We're still working a first micro macro cross slash macro pullback signal here in the hawk. You might want to do the same kind of thing. Maybe throw a little trend line under here. I wouldn't recommend getting in too early. You may want to wait for even a second push opportunity. I don't think the market's going to explode to the short side, but yeah, I don't know. We've kind of been retracing our tracks, haven't we? The way this day's been unfolding. Just a regular seesaw back and forth. Robert asked, do you ever use an OCO order? Yes. Typically on crude inventory days, I will bracket the market and kind of let the report bring me in. But it's fairly easy to do. The problem is identifying a range. Today's range is a little bit too broad, I think, to use an OCO order on. Ideally, you want the market making a rather tight little sideways trading range. Something that you can bracket. Maybe something like this. The thing is, very often I will have a bias on the trade. It's rare that the market is so neutral that I'm prepared to take it either way. And if that's the case, then usually I figure we're in a trading range. See, let's say we consider this for an OCO order. Very often I would consider that to be a trading range, and when the market's in a trading range, I like to see it break out and then prove that it can stay out and then give me a signal. Same thing here to the short side. Breakout, prove it can stay out, and then give me a signal. That's the kind of thing that I'm looking for. See, so we got the breakout. Here's the retest now. Oh, but they did come back out and produce a signal, but it just didn't take. Actually ended up going the other way. Tony, I feel your pain. I have been there myself. Tony says, well, I'm happy and proud for all the traders that are doing so well today. I just can't seem to get it in gear. Up a whopping $150. So not going to jump off a bridge, but for some reason my charts are not clear today. These types of sessions, yeah, they can be a little frustrating when you just can't seem to get a handle on the market or you're late to the signal. We've all been there. This hawk signal now moving into yellow bars, so I'm going to cancel that because that voids our opportunity. Daniel saying, is the eagle producing a hard edge bounce? It most certainly is. And the only thing here about this eagle signal is that it is against the ATR. We've been using the ATR here as a filter. So the signal itself is complete. If you're going to wait for it to flip the ATR, you need to enter after this next bar forms. I think it's the nature of a sideways trading day as well to be difficult. You can see trade forecaster saying we are in swing mode for about another minute, after which we're moving into scalp mode. So they expect the sideways trend to continue. Robert says, I noticed the E-mini was drifting around the open trying to find direction. The NASDAQ, the Russell, the Dow, the E-mini, they're all going to be doing the same. I suppose that's why I've been a little more keen to try to short, because very often, if the market is having a hard time finding direction, it seems it finds it easier to decline than to rally. But that's not always the case. So the eagle producing a signal. We got the hard edge bounce here on the Raptor as well. So we got the number 3 signal producing there. we do have the opportunity here on the Raptor for a second push on the entry. So the signal has engaged. Now the price is retreating from the signal, so we know the limit of that current bar. We know what appears to be the limit of the buyers. And this is a very easy way to try to keep yourself on the right side of the market. What we're doing here is we're making the market show us momentum before we recommit to the trade. And if we come back now here with another sell signal, well then we will have our number 2 soft edge sell, the counter trend signal. But they are all over the place today, aren't they? All right, so here we go. Oh, and they are just not playing nice today. Okay, I'm going to get it really, really tight with my stop here. I'm only going to give them the 1 bar, essentially moving into the bar high-low strategy. I'll give them that much. It's just that we're getting back toward, this 54 25 area, that was problematic before. No question, the market has gotten a lot quieter than what it was. Okay, come on, let's go. Let's get busy. Uh-oh. All right. Okay, so it looks like we may get that reversal now that we were looking for. Come on, where's that counter trend signal? We did get a green bar sell here on the hawk. So you could have shorted from there. Yeah, Daniel says you scared them. Well, boys and girls, we're going to close up the room here, but that's what you should be looking for. You should be looking for a sell signal to develop. And I think we're going to see a little bit of a move lower here, perhaps even pressing the low of the day, which would bring us down around 54.11, and quite possibly even down here to the median line around 54.02. That would do a very nice job of filling the gap, the opening gap. All right, so that's something to keep a lookout for, and I guess we'll see you tomorrow. We'll talk to you then. Bye for now.